if you can please start out. Thank you. Irvin, if you can please go ahead and share your screen with the tax season update letter. Everyone, as he's pulling that up, you received the tax season update letter. It was uploaded to your portal. If you do not see it in your portal, please send that email to David, myself, or Marticia, and we will try to get you a copy. We also sent it by email and attached a copy as well in there. But everybody should have the tax season letter included in their portal. Irvin, are you there?
Yes.
Okay, thank you. Okay, you can keep scrolling down until I tell you to stop. Okay, let's go through these steps first. Go back down. So just wanted to share with you guys the steps that we usually take when you file your tax return with us. Again, like I said, this information is available in your portal, and we also attached it by email. So the first thing, you schedule an initial consultation, you accept a quote, we set up your portal, and then you upload your documents. We'll review the documents that you uploaded. We prepare your returns. You sign the engagement letter, complete the client questionnaire, respond to any additional questions that we have. And then we send you an email to review and upload your final documents to the portal. And then, Irving, can you go up a little bit to the last? Yeah. Yes, then the next thing is you pay our invoice in full, sign the e-file forms, we e-file, hear back from federal and state, and then you complete a survey. Items that are in red are the items that you handle as the client. Items in green is handled by our staff, and then items in orange is handled by both. So this is kind of like the step that we follow when we are preparing your return. Does anybody have any questions about the process, any clarification that you need, something that may have been confusing from last year? So we can take that into consideration or provide clarification here. Feel free to type it in the chat, or you can unmute yourself and ask the question.
Happy New Year. This is Dawn Day. I didn't get the email, nor is it in the portal for me.
Okay, so Irvin, if you can start writing down the names and what the issues are so we can resolve. So Dawn Day, Daundaye, did not get the information in her portal or by email. So we need to check what's going on with her email address as well as what's going on with her portal.
Right. It's DAWNEDAYE. Thank you.
Yeah, thank you. Sorry about that. All right, anybody else? Okay, you know what's going on? I'm sorry. I think I realize now what may be going on. I don't think they finished uploading to the portal. Irvin, maybe you can chat David and check to see. Chat David while we're on just to confirm, because now the Rigorosos too haven't received theirs. Catherine wants hers to be sent by email, so we need to check the portal to see what emails we have. But I'm gonna have David just confirm whether or not they're done with the uploads, because that might be what the reason why some haven't gone in. But we have the names, and I'll have David confirm. Okay, Kimmel Edward. Okay, so just put it in the chat, and Evan will write down the names, and then we'll check to see, just to confirm. Hopefully by the time we're done, David will confirm whether these ones are still being processed. Okay, now let's move to the next page. Okay, so the next thing is just giving you a guide on the things that you need to be aware of for the items that you need to provide us. Now, I know some of it because we usually send out that link of your individual list of questions. We send that out every year because sometimes we assume that, you know, things haven't changed, and then we end up finding out later that things changed. So I think a few years ago, we made that decision that we need to ask these questions every year. Now, feel free when you are filling out that form that is on the standard list of questions. It's okay for you to do SALY, which means same as last year. So don't feel like you have to, you know, respond every time. But if your information changed, then we want to know what that information is. Okay, so there are certain things that we would always ask you about every year just to confirm whether or not you know, you have like dependent address. Some people, their names changed, just to make sure that everything is okay before we start filing. Irvin, you can scroll up.
Hi, Ebere. Sorry, quick question about that one.
Mhm.
I didn't get this form this year. I know I normally get it every year, but I didn't get it this year.
Okay, can you put your name in the chat so that Irvin is getting the names of everyone now to figure out for those that haven't received them. Maybe they're not done uploading. I thought they would be done by now, but David will check. So just put, if you have not gotten it and you're still on, just post your name in the chat and Irvin will send that list to David to figure out what's going on. Okay, keep scrolling up, Irvin. Keep going, keep going. Right now, Irvin, keep going. Right now, everybody should be getting their tax documents. We usually prefer, okay, you can stop there. We usually prefer that you wait until you have all your documents to upload. But if you feel like you're going to forget or whatever, feel free to upload it. But it's just whenever you upload, we put you in the still sending documents section because we're waiting for you to let us know you have finished uploading your documents before we start working on your return. So now I want you to pay attention to this, the number 18, new rentals. If you have a new rental property, we want you to send us the rental income and expenses. We want you to send us the purchase HUD-1, any improvements that you did over the years. So let's say it may have been a primary residence and you moved out and now is a rental, or you bought it a couple of years ago as a second home. Bottom line is that it became a rental in 2023. We want you to send us the purchase HUD-1, the date that it became available. Okay, so there's a difference between when the property was rented versus when it became available for rent. When it became available for rent is when you actually got it listed. So it's very possible that you have a property listed in October, but didn't get rented till January of 2024. That property was placed in service in 2023. So I want us to spend some time talking about this because 95% of our clients, you guys are real estate investors. So you do want to let us know the date that it was available, meaning listed for rent, and then any out-of-pocket rehab and improvement costs, hazard insurance, then the mortgage statement. If you started on a rehab in 2023, but as of December, that property did not sell, you can give us the information, but it will not be included in your tax return for this year. It will be included in the year that the property is sold. Okay? This is very, very important. So I'm going to pause here and take some questions before we move on. Any questions about new rentals or rehabs and flips that you're working on before we move on? Okay, if you have any questions, post it in the chat. Irving, you can keep going. Okay, so now we're going to deal with the issue of a K-1. If you had a business that is a multi-member LLC or an S-Corp, you should get a K-1 from the business. So you do not want, this is more for our new clients, you don't want to file your individual tax return until the business return is completed, okay? If you had cancellation of debt income, you actually want to notify us immediately if you got a 1099-C for cancellation of debt income, because if you were insolvent in 2023, meaning that your liabilities were more than your assets, you could exclude that 1099-C. So we do want to do the work ahead of time of calculating the insolvency, filling out the insolvency worksheet way before we get to the filing of the tax return. Okay. All right. Irving, keep going. Home office deduction. This is very important. In order for you to claim the home office deduction, your home office needs to be strictly used for business. You can have a TV in there. You can have a bed in there. You can't be playing poker in there, doing all kinds of things in there. It has to be strictly and exclusively used for business in order for you to deduct the home office. If you moved, that means that you will probably have 2 home offices for the year. So you want to give us the information for the old home office as well as the information for the new home office. The things that I'm highlighting are kind of things that come up during the tax prep that we've noticed that people tend to maybe not give us the right information or have a misinformation that I need to correct, okay? So please make sure that the home office that you have is exclusive. If you are an S Corp, if you are an S corporation, you are not able to deduct the home office, but instead you can set up what is called an accountable plan. The accountable plan enables you to take some deductions. Let me see if Marticia is on here to address that. Yes, Marticia, if you can address the accountable plan real quick while I address Regina's question.
Okay, perfect. Can everyone hear me?
Yes.
Okay, awesome. So the accountable plan, it allows you to deduct certain expenses that you would normally, use for business and personal, and also expenses that you may pay for with your personal account, but for the business. So this is specifically if you have like an S corp. So things that would go under the accountable plan would be like the business use of your home. So if your business is an S corporation and you use your home office for work and you want to take the home office deduction, then you need an actual accountable plan. We can assist you with setting up the accountable plan, and it doesn't actually get filed anywhere, but you do have to get it signed and notarized. So the accountable plan will protect you in the case of an audit. So what the accountable plan says is that, so let me go back just a little bit. So as an S Corp, you're actually an employee of your company now, rather than just the business owner. So what the accountable plan says is, it says that for our employees that incur expenses out of their personal account, the company will reimburse them for that. So as an S Corp, you can either reimburse yourself from the business account to your personal account monthly, quarterly, or, at the end of the year, we'll just take the deduction on your tax return. And so you'll just need an accountable plan for that. Now, the accountable plan goes for your home office, and it also goes for when you use your personal vehicle for business. So if you're using your personal vehicle for business and the S Corp doesn't actually own the vehicle, then you also need to have an accountable plan set up. And then if you incurred any expenses for the business out of your personal account and you want the business to reimburse you for that, the accountable plan also covers you for that. So if you don't have an accountable plan in place, what happens is if you were audited, even if you did prove that you use this area or you use your car for business, even if you were able to approve that, but you don't have an accountable plan in place, then the IRS could disallow the deductions.
All right, thank you, Morticia. Several questions on the chat I have posted, so please feel free to look at the responses there while we move on. Irvin, you can keep going. Also, if there's anything that I cover on here, anything that we don't cover on here that you have a question for, maybe you had a special circumstance this year, please feel free to post it on the chat or when I open it up for Q&A. Evan, you can keep going. This is just talking about documents you need to send us. If you set up new entities, we need the EIN letter, S Corp acceptance, operating agreement, all that. So these are the links to the standard list of questions. If you know that you will be filing with us, it's best to go ahead and get these completed now. So we have copies of it. It will be the engagement letter, the personal standard list of questions, and the business list of questions. You can keep going, Irvin. Okay, so filing deadlines, filing deadline for this year will be April 15, 2024. You can get an extension. If you already know that you're going to be getting an extension, feel free to let us know. If you are a prior year client and you have a business, 99.9% of our clients do not get their business returns done by March 15th. So we automatically file extensions for all the businesses. The individual would be what we have by the time we start approaching the April 15th deadline. Please send in your documents earlier this year. We are growing. We thank God for the growth, but it also means that we start setting some boundaries in terms of when you send in your documents for us to process them. Okay, so just note these deadlines. The partnership and S corporation deadlines is March 15th. If you have a partner or you set up a new entity this year and it's a partnership on S Corp, make sure that you are aware of the extension deadline. We have some clients who usually don't take that into account and their partners do not know because maybe they're not working with an accountant. Please keep in mind that if you have a new business, you want to get that extension in and filed by March 15th. If you are a client, send us the formation documents so we can add you to the new business list. Okay? I'm glad. Yes, JJ, I'm talking to you. By the way, let me do a shout out to JJ. JJ, you can also send that information. So for my 30th, we celebrated 30 years of tax prep, and I invited clients and industry partners, and Janine couldn't make it, and she sent me this really, really, really cool Sorrel drink, really exquisite and upscale drink from New York. It was so good. I went to the company and I ordered 12 more bottles. I'm like, I'm going to be loaded up for tax season. But Janine, feel free to post the link here because that drink is so, so good. Oh my God, it was really, yeah, it's really, really good. Okay. Just to keep going, Irvin. So just be aware of the extended deadlines that you need to meet. The nonprofits, May 15th, C Corps, April 15th. Keep going. Also, while he's scrolling, Irvin, keep going. We haven't heard anything about the ERTC credits. Okay, you can stop here. We haven't heard anything about the ERTC credits. It's supposed to expire January 31st. But they're trying to see whether it can be extended, especially because of the moratorium. If you did have a drop in income, a drop in revenue in 2020, 2021 compared to 2019, and you have employees outside of yourself that were W-2 employees, you could have qualified for the ERTC credit. If you did not take advantage of it, please feel free to email us so that we can give you that information. Okay, so these are the significant tax law changes. Again, this is in your portal. There's no way we can exhaust the whole conversation on this call. This is just to bring some major highlights to you all. And then if you have questions on one that specifically applies to you, feel free to let us know. So just the tax bracket thresholds widen, long-term capital gains rate, the retirement savings and contributions. So changes, and then these are things that we take into account for you. It's not something that you necessarily need to know off our heart, but we just want you to know that we are aware of the tax law changes, and we also let you know that information just in case there's an area that applies to you that you might need to let us know. But we usually ask these questions also in the standard list of questions. Okay, Arvin, you can keep going. Yes, these are just the tax law changes. Keep going. Feel free to read it on your own. We have not heard anything about the tax law changes that these guys are trying to pass. For selfish reasons, I think it's too late to pass it, but because I love you guys, and I may want you to get that additional bonus depreciation, additional child tax credit, they could pass it, but if they pass it and it's retroactive, now we got to have the software change. There might be extended filing deadline and stuff, but we'll let you guys know if those two new things that they're trying to add on, the additional child tax credit, and then extending the bonus depreciation, because there was a sunset provision that ended last year. You can keep going, Irvin. Thank you, Ashby. I appreciate you too. Keep going, keep going, keep going. Talked about the residential energy credits. Okay, keep going. So as you can see, these things are very, very comprehensive. The reason why we share this is so that if there's any area that applies to you, even if you feel that even if you're gonna file your return later on in October, don't wait to look at this tax season letter then. It's better that you look at it now so that you can tell us if any of these things apply to you, and you keep it in mind for your file. We can add a note to your file. So you can say, hey, please add this note to my file. Please note this for when we start filing. Okay, so we are done with the tax season update letter. Does anybody have any questions before we move on to the rest of the item on the agenda? Irvin, please pull up the CTA, the Corporate Transparency Act. That's what we're going to cover next. Does anybody have any questions for me?
Ebere, just a quick question. Are we requesting extensions, or is that just going to automatic for those that you've done in the past for?
Yeah, we automatically do. If you filed, good question, Marcy. If you filed with us in the past or you are now in the wealth building program, we automatically file for you. Now, here's what happens sometimes. Because you guys know that we automatically file, sometimes you forget any changes that may have happened. So if you formed a new business or if your business closed down, you want to give us that information now so that we can take it into account. We've had clients who wait until September, they're filing in September, and that's when we found out that they formed a new business. Well, the extension deadline for that business would have been in March. If we don't file it in March, you're going to get penalized $190 per partner per year, per month. Even though you can have that penalty waived, it's really a one-time, first-time abatement. So why use it when you can avoid it by notifying us of any new businesses that you may have formed during the year? Okay. Any other questions? All right, Irvin, we're ready for you. Sorry, go ahead.
Yeah, this is Eric. Hey, just real quick. I'm looking to dissolve one of my LLCs. Do I just not renew it, or is there something additional I need to do to dissolve an LLC?
Very good question. If you have an LLC that you want to dissolve, is it best to just let it lapse and not pay the annual fee, or do you need to file the articles of dissolution? It really depends. If you do not pay the annual fee, if you're in Maryland, the $309 fee, after 2 years, it'll lapse on its own. It will be automatically forfeited if you do not file that. However, there might be instances where it may be better for you to just go ahead and use that $300 I think it would only be maybe about $100 to file the articles of dissolution and have it dissolved. Because there's a time lag between when you don't file the annual report and pay the fee and when it's actually forfeited. It's actually 2 years. So let's say for 2023, you're supposed to file it by April 15th of 2024. You don't file that. It takes, I think it's by October of 2025. That means if any lawsuit, anything happens, you could still be on the hook for that. Whereas it will be better better instead of just letting it lapse, to just take $100 and file the articles of dissolution with the Secretary of State and get that entity dissolved. Now, if you have outstanding liabilities, you were not allowed to dissolve the entity until you resolve those liabilities with the creditors. So it's usually a facts and circumstances case, depending on our clients, what kind of exposure they have, what it is that they have. I tell them, hey, don't pay the fee and let it forfeit on its own. For some other clients, it may make sense that you go ahead and file the article of dissolution with the Secretary of State. Okay. All right, Irvin, I'm waiting on you. Yes, that's what we are getting ready. That's the next topic that we are getting ready to cover. So this is the Federal Corporate Transparency Act update. Each reporting entity is required, you are required to report. If you are a U.S. corporation, U.S. LLCs, other similar entities, even trust, because I've gotten that question a lot. People say, oh, if I'm a trust, am I required to file the beneficial owner information form? Yes, if you are a trust, you are required to file the beneficial owner information form. The deadline to file, if you are an existing business, is January 2025. So you have 365 days to get this filed. If you are a new entity, meaning that you formed your entity after January 1, 2024, you have 90 days to get it filed. You can go on the beneficial owner interest, you can go on the FinCEN website. We've sent a lot of information about this. You can go on the website and get it filed yourself. For us, we are not going to be touching these until after tax season. And let me give you 3 reasons why. There's still a lot of conversation on, are CPAs allowed to do it? Is it the unauthorized practice of law? Is there going to be an extension and all that? So we're just waiting. We're going to deal with that after tax season. If your business is already existing, you have 1 year to get it done. If your business is new, you have 90 days. 90 days still puts us at after tax season. So we're not going to be touching these until after tax season. We have updated the list of questions, the business and individual list of questions, to ask you whether or not you would want us to file this for you. You just need to let us know that you would want us to file it. We get you on a list after tax season. We will let you know how much it's going to cost and whether or not we're going to file it. But I'm not touching any of these. But from what I've seen so far, it only takes 6 minutes to file. The most difficult thing is uploading your driver's license. Again, if your driver's license changes, that is a change of information where you need to update. So this corporate transparency form that you need to file is only one time. It's not something you do every year. If the information change, if you have any information change, maybe the beneficial owners changed or your address changed or anything like that change, you are required to provide that update to them. Again, if you do not file, there is a penalty, criminal and civil. So that's something to keep in mind. But for us, it's not something we're panicking on and saying, no, we're going to get it filed. We do have clients who have started filing it themselves and sending us copies. But for most of you, it's okay to wait. We have a year to get it done. If you start in May or June, you'll be done by December. If it's a new entity, you have 90 days. So that still runs us towards the end of April to get it done. So I'll stop here and take any questions on the FinCEN and beneficial owner information before we move on. Yeah, the due date is by December 31st, 2024, if you already have existing businesses. It's currently open, but you have a whole year to file. So there's really no rush. Oh, I forgot to tell you guys the third reason. The third reason is because I want them to iron out all the kinks and deal with all the errors and all the discussions. There'll be more guidance to me after 90 days than it is when it just came out about 3 weeks ago. This is the reason why I'm also waiting. Okay, you said updates to ID numbers need to be provided along the way. Yes, if you do check your updating your driver's license, so if you get a new driver's license, that is a change that requires an update to the beneficial owner information. Okay. Under deadline, it says new companies have 30 days to file. It's 90, they extended it because, well, I'm gonna check. Martisha, can you confirm this? Because when we at the CPA meeting that we were at last week, they said it was 90 days. So I'm gonna have them check again to confirm, but we were informed that it was extended to 90 days. So maybe it's 30 days with a 60-day extension, but I know last week they told us 90 days. I'll have Martisha check on that, hopefully before we're done, to give us an answer. Okay, any other questions before we move on? Okay, Evan, what's the next document that I'm supposed to cover?
The estate planning.
Okay. Evan, hold on. So, James is asking for the link. Martisha, can you also check and post the link on here? We also sent it by email, and we're gonna send it again because I put like a whole video together about it with the link, but we'll also post it here with the link for you to go and file. All right, Irvin, what did you say the next topic is?
I said I have the estate planning flyer form or document.
Okay, we can leave that for last. Is there anything else?
No.
Okay, I think I remember what it is. The last thing that I wanted to talk about, in a special way this year, this is going to be for the business meetings that come up. So for those that are in the wealth building program, we usually have your business meetings May, June. For those that are not in the program, it's something that you have to pay a fee to get a business meeting with us. We are going to start looking at your family legacy plan, right? So we're going to look at the way that your business is interacting with your finances and is interacting with your legacy plan and your financial plan and your family plan. So kind of looking to see how all three of those relate. We found out that it's very, very important that we start to do that because sometimes a decision that you make financially could impact your legacy or could impact your family or could impact the business, or a decision that you make on the business side could affect you financially or could affect the family, or a decision you make on the family end could impact the business or could impact your legacy or your finances. So we are going to start looking at how all those intersect. These three areas alone intersect in almost 9 different ways. So we're going to pay special attention to that during the business meetings that we have that will be coming up in May, June. If you have not already started thinking about what your core values are, we will send you out the core value exercise report, which is where we're encouraging clients to start to think about what are your core values? What are the things that are important to you? What are the things that if you were to leave this earth today, you want to know that you have set things up properly for these core values to take place with you, your family, or your loved ones, or the charities that you support. Based on those core values, then we will see how are those core values playing out in your business, playing out in your family, playing out in your finances, and then ultimately in your legacy. Okay? So those are things that we're going to be looking at come May, June. We also have an industry partner who has an estate webinar that is going to be coming up. It's a free webinar. So I will ask Irvin to share the flyer right now, and then also post the link where you can go and register. I think the webinar is sometime tomorrow, but she is an estate planning attorney, and she's going to be talking about, you know, the importance of an estate plan, how to create an estate plan, and creating a legacy that helps to shield you and your loved ones. So, it's on the 31st at 1 p.m. We are also going to send this. This is going to be part of the stuff that we send at the end of the meeting as a recap. So you'll have that, as well as the link on the website where to go and register. Irvin, if you can also pull the link to register as well and post it in the chat. Okay, Martisha, do you have anything on the bookkeeping and on the depreciation end that you want to bring to clients, or in terms of communicating with us? And then after that, we can open it up for questions until we're done.
Yes, so just to add to what Ebere said about the BOI fencing requirement, it is 90 days. So if the business started in 2024, you have 90 days to file. I went ahead and posted the link in the chat. Also, we sent out a newsletter where Ebere did a video, if you all wanted to go watch that on YouTube, which just explains it more in detail. As far as bookkeeping, we do offer bookkeeping in-house. And so if you're interested, I can definitely schedule you a call just to discuss your specific situation and your business and how we can best assist you. We also have an email that we can send you that just goes over our bookkeeping services. But as you all know, it just really depends on your business. Everybody has specific needs. So the email will address like the general bookkeeping services, but if you needed something more tailored to you, I'd be happy to get on a call with you. I think Marcy is on this call. She can actually attest to that. We had to tailor something specifically that worked for her, and it ended up well. That's pretty much all that I have to add.
Oh, thank you. Thank you, Martisha, for that. So I have posted the link of the FinCEN. It's just a 1-minute thing where I just gave five things that we want you to keep up with. I'm also going to be sending you guys a link soon about our 30th anniversary timeline from when we first started. Back in 1993, I was 20 years old when I started doing taxes. It was from a college work study program. I did not know that doing that college work study program was what was going to lead me to the career path that I have today. So it was just wonderful seeing clients, seeing staff, and looking back over 30 years, the kind of progress that we've made. And I hope that for each of you, as you build your wealth, that you would be able to look back on your timeline, celebrate the successes, learn from the failures, and then keep rolling. Okay. Right now we're going to take any general questions as we get ready to wrap up. Does anybody have any questions, even if it doesn't have anything to do with what we've just covered? If you have any general questions, feel free to ask at this time. Does anybody want us to cover anything about 1099s? Anybody have any 1099 questions? Have you guys gotten in your 1099 documents to David for them to file?
Hi, I have a question, Ebere. This is Fredecia. So a new customer, would they start with filling out that link that you referenced, something general agreement or something like that?
Okay, very good question. Irvin, can you please pull back up the tax season letter and pull up the steps to filing with us? So basically, if you're going to file with us, the first thing is that you need to fill out the quote form. So we have a tax quote link that you need to fill out. It gives you a quote for how much we charge to prepare taxes. Then you accept the quote. You would need to put down a deposit, open up your portal. Then it's after the portal has been set up, you can now start uploading your documents and then filling out the links. So to kind of make sure that you've gone through the first 5 steps, you've done your initials, you've accepted your quote, you pay your deposit, and then we set up your portal. Then you start uploading documents and then sign in those forms. So the forms is when you get to number 5, and number 7 is when you start dealing with the forms.
All
Okay?
right. Is there an opportunity for dialogue before the deposit is paid? I mean, there may be a question about the particular scenario.
Yes, that's something that Irvin can handle. And if it's something, Irvin is our business development specialist. He would answer those questions for you. But if there are questions where he can answer and you need to have a meeting with a CPA, with one of the CPAs, he will schedule an appointment for you to talk to Marticia or myself.
Okay, so we would have that conversation with Irvin by email or telephone.
Yes, whichever one works best for you is fine. So I would have him note that. Irvin, please write down for this year. We already have her contact information, so reach out to her and determine if you can answer her questions. If not, then set up an appointment, a consultation appointment for her.
Awesome, thank you.
Hey,
You're welcome.
this is Kimo. I have a question about 1099.
Okay, hold on. Let me deal with Laurie and Lynn and Catherine. Then we will open it back up to those who have questions. So Laurie's questions, 1099 NEC. Does it matter if you pay the vendor via credit card, PayPal, or Zelle? Yes. I think if you pay them through one of these third-party cash companies, you don't necessarily need to issue it to them because it went to PayPal or Zelle, and Zelle would be issuing something to them because they received money from them. So whether it's Zelle, Cash App, PayPal, but if it's through a credit card, then yes, you want to do a 1099 NEC. Okay, Katrina, could you please let us know which link you wanted us to share again? I'm not sure which link you are requesting. We've shared several links, so please clarify. Okay, and then let's see, this is Lynn. Can you please clarify if 1099 NEC is required for Venmo payments to subcontractors in 2023 and lieu? Okay, yes, that's kind of like the same question that Laurie had. So if you're using a third-party payment provider, you do not need to issue them a 1099 on your own because Venmo is going to issue them one already. Okay, the 1096 is automatically handled when we file the 1099. The 1096 is automatically transmitted to the IRS. So there's transmissions to 3 places: to you as the issuer, to the recipient, and then to the IRS. So the IRS gets a copy of the 1096. Okay. Could you go over who exactly is considered a beneficial owner for this FinCEN purposes? Does that include foreign persons who are independent contractors? No, it does not even include independent contractors here. A beneficial owner is somebody who has a direct or indirect interest in your business. Indirect interest could mean that they are part of the decision-making authority. So it's possible that the person is not an owner of the business, but they influence and help with making decisions. They are a beneficial owner. But somebody who is an independent contractor does not qualify. Okay. Irvin, could you please post the tax quote link for Katerina? She wants the quote for signing up for the services. So, or send her the services link on the website and then she can pick which one. Is 1099 required if you paid someone by check? Yes, it does not matter how you paid the individual. As long as you paid over $600 for services, you are required to issue a 1099. Okay. What if you don't have their EIN or Social Security? Yes, we've gotten this question a lot. This is very important that you get a W-9 before they actually start work. But if you do not have it, you want to show documentation that you've requested this information from them, whether you're sending an email, mailing them something certified, you want to show and establish that you have made attempts to get this information without compliance. You are allowed to take the deduction, but if an audit comes up, dependent on how you did your due diligence, the IRS may or may not allow it. But if the expense was ordinary and necessary, and you made all attempts to try to get this information from them, you are able to still claim the deduction. This also applies, I know we have people who have bad debt situations. They say, oh, I lent somebody money and they're not paying me. What am I going to do? Same thing. You need to either hire a lawyer or you need to file something in court or send them a document requiring them to pay. And then if they don't pay by a certain time, then you can write it off as bad debt. You can't just say, oh, somebody has refused to pay me, I want to write it off. You also need to establish and show substantiation for how you went after them to get paid and that they did not pay you. Okay? All right, somebody wants me to talk a little bit about the tax implications of filing multi-member LLC. Yes, so when you're filing a multi-member LLC and there's a lot of partners, it really doesn't matter whether it's 5 partners or 50 or whether it's 50 or 100. You know, the number of partners really doesn't matter. It's just that it's going to have a large compliance requirement just because of the volume. But it's just getting all their information in there and everybody gets a K-1 from the partnership. And so that's not something that you want to wait to start late. It's something that you want to either get started early or just file an extension. Now, if that entity is a new entity, meaning this is the first time that it's going to be filed, you do want to advise the partners. If you know that you're not going to get in, I'll say in the next 2-3 weeks, if you know you're not going to get in the financials in the next 2-3 weeks to get started on the return, then you want to let them know that you're going to file an extension and that they will get their returns after the filing deadline. But if you look in the operating agreement, there is a financial section in there, and it usually says how long you have to get them their K-1. So also look at what is stated in the operating agreement. Okay. What do we do with the documentation of attempts? Yes, you can also send to us and we will save it right behind the proof of how much you paid this person that they refused to provide. We keep all copies of documents for at least 15 years anyway. So because it's electronic, we have copies. So it would be good that you have a copy, we have a copy, just in case something happens later on down the road. Okay, my sub received 1099 from Venmo. Do I need to send? No, you do not. You do not need to do a 1096 separately if a 1099 has already been issued. Because if Venmo issued them a 1099, the 1096 has already been sent to the IRS. So you don't need to do a 1096 separately. Okay. Does LLCs require 1099 or only individuals? LLCs require. The only people that don't need 1099s are C corporations. Or like I said, if you paid through a third party, if you paid an attorney, you need to do a 1099, even if an attorney. So we have this instance, even when the attorney is an incorporated or an S corp, you're still supposed to issue. So that's one an exception. You're still supposed to issue a 1099 to attorneys. So yes, LLCs are required to issue 1099s. Okay, so I think I've gone through all the questions here. We will now open it up for those who want to unmute themselves and ask questions. We are almost done here.
I just want to add one more thing to what you said, Ebere, about the requirements for the 1099. So if the business that you paid, if they're an LLC, but they're taxed as an S corp, they will not get a 1099. And if your business is an LLC taxed as an S corp, you will not get a 1099 unless, you know, you are a law firm.
Thank you, Morticia. So just leading into that question, an S corp is not an entity type. A lot of people get it mixed up. An S corp is not an entity type. It is an election that you make with the IRS. So you can be an LLC and elect to be taxed as an S corp, or you can be a C corp and elect to be taxed as an S corp. So those are usually the two entities that can file an election to be an S corp. All right. I know some people had additional questions. Feel free to unmute yourself and ask your question at this time.
Hi, Ebere, this is Gabby. I have a quick question about new entity that we incorporated actually through your firm last quarter of 2023, and we didn't do much business yet. So I just want to, it's kind of larger number of partners involved. And I just want to, if you can give me a little bit more how the implication it may have. I say you said a little bit, but in terms of the tax filings, because we didn't do really much business except just putting some initial capital together. So I'm wondering how that is going to impact the new members, which are relatively large when they file their taxes, and how we can advise them.
Yeah, if you didn't have any activity for the year, then you do not need to file. But if you had any activity for the year, even if it's the last 2 months or last 2 weeks, if there was an activity, then you need to file. So I think the main thing is taking the time to have your bookkeeper or whoever is handling the bookkeeping for the business to go ahead and get the financial statement ready to see what kind of activity you had. If there was no activity and it was really just capital contribution, then there is not a need to file for 2023. You would start filing in 2024. Okay.
Sure, thank you. I'll reach out to one of your staff there. Okay, thank you.
Yes, Katrina, an LLC can be taxed as an S corp. So the S corp is an election that you make with the IRS. It is not a separate entity. So an LLC or a C corp can file an election with the IRS to be taxed as an S corp. Usually, when it makes sense to file an election to be taxed as an S corp is when your salary could be lower than the overall profits that are coming from the business. Then it makes sense to file so that you can lower your payroll taxes. Because remember, there's 4 kinds of taxes that you have to pay. You have to pay the Medicare tax, the Social Security tax. Those 2 are called payroll taxes. And then there's also the federal tax and the state tax. So if it's possible that your reasonable salary is much lower or will be much lower than your overall income, it makes more sense to do an S corp election so that you can get yourself on a reasonable salary compensation. The difference between your reasonable salary and the net profit of the business will not be subject to payroll taxes. So the S corp election is a benefit to those who do have income where not all of it is subject to self-employment tax. Morticia, do you want to provide more clarity on that as needed? And this will be the last question before we wrap up.
Yeah, so I think Ebere pretty much covered it in detail, but pretty much what we look at when determining the S corp election is, one, we want to see if your business has a profit, and we also want to see if based on your business profit is going to be subject to self-employment tax. So if the business has a profit but you have rental properties, those are considered passive income. So the S corp election wouldn't apply to you because you won't have self-employment tax to pay, so Social Security and Medicare tax. So once we look at your profits, then we need to look at the base of where your profits stand. I usually like to see if your business has a profit of at least over $50,000. because in that instance, you would be saving on Social Security and Medicare tax, but also we need to make sure that the cost benefit outweighs the cost of the S Corp. So with the S Corp, there is more scrutiny, and so there's compliance requirements. So the compliance requirements will be, one, you now have to file an S Corp return, which is due on March the 15th. Now, if your business is already a partnership, then you're already doing that filing requirement. But if your business is a single member LLC or a sole proprietor, it's due with your personal return on April the 15th. So now if you were to be an S Corp, you have an additional tax return, and then it'll be due on March the 15th. The second one is you must have adequate bookkeeping. So that would mean that you need to get something set up like QuickBooks, Wave, and we can definitely assist you with that. We also offer bookkeeping training where we'll go through everything you need to do for the month to provide yourself with a full set of financials, and also we can do it for you. So that's the second requirement of the S Corp. The third requirement is that you must pay yourself a reasonable salary. And so we would look at how much would you pay someone to do the job that you're currently doing in the area that you're in, but also within reason of what the business makes. Because if your reasonable salary would be $150,000, but because you're self-employed and the business is still growing, the business only had a profit of $50,000, we would take that into account. So with paying yourself a reasonable salary, it does have to get ran through payroll. So we need to make sure, one, does the business has the cash flow to process payroll, and also can you afford the payroll processing costs? So essentially, if a business has a profit in general, the S Corp will save you money, but then those other compliance requirements cut into the savings. So that's why we like to look at a threshold of the business having a profit of at least 50,000. But then as your reasonable salary starts to get over the Social Security limit, and I think the Social Security limit is actually going up for 2023 tax year. It used to be like 147,000. Now it's going up to 160 something thousand. So if your reasonable salary is going to be over that amount, the S Corp may not be beneficial for you. But if it's going to be less than that amount, then you would see a tax savings. So usually if the business has a profit of about $100,000, we tend to see a tax savings of about $9,000. So the S Corp election is very beneficial. Now you do have to take into account other stuff. So if you have like W-2 income and your W-2 salary is already $100,000, in that case, or it's over that amount, then we would run an analysis to see how much you would be saving in self-employment tax, because you have a special situation to where we need to take into account your W-2 income along with your business income. So if you follow any of those parameters, we'd be happy to, get on a call, or just if we already did your tax returns last year and your tax situation wouldn't change, we can look to see if that would benefit you. I've already reached out to a few clients that I know, based on the growth of their business, that the S Corp is definitely going to benefit them this year. So that pretty much gives you all like a high level overview of the S Corp.
Thank you, Morticia. Okay, so we're pretty much done. Katrina, what's the question that you have about the C Corp? The same way that an LLC can be taxed as an S Corp, a C Corp can also be taxed as an S Corp. So I don't know if that's what you're asking. Yes, an LLC can be taxed as a C Corp, but it's also very rare, and we need to be very, very careful on why you're doing that. Because remember that for a C Corp, that it's double taxation. You pay taxes at the C Corp level, but then when you take a dividend out of the C Corp, you pay taxes again. So because 95% of our clients are real estate investors, there's usually no reason why an LLC would want to file an election to become a C Corp. But I know that sometimes when we're dealing with foreign investors and all that, those could be reasons that are considered. So that's something that maybe you want to schedule a consultation for us to talk about. Okay.
All right, I have a question before we go, please. What is a good time of the year to file an S Corp? Like if you want to elect to be an S Corp, what time do you file that?
Okay, I'll let Morticia answer that.
Yes, great question. All right, so there's two types. You can file a timely election or you can file a late election. A timely election, every year on January 1st, your deadline starts over. So you have until, so to make an election for 2024, this tax year, you have until March the 15th to make a timely election. And that would actually, even if you're doing it on January 29th, that would backdate you to January 1st of 2024. So you'll be an S Corp for 2024. You have until March 15th. Now, we don't want to do it on March 15th. We actually want to get it in. I like to get it in by February the 15th. The only reason is, one, the IRS is very strict on S Corps, and sometimes they act like they have amnesia. And so we just want to give them enough time not to mark it as a late election. So if you come to us on like March 1st and you still want to get it done, even though it's still timely, we might submit it as late only because we're familiar with the IRS, depending on when they get the mail, even though it's postmarked. The second type of election is going to be the late election. So the late election, we do have to add like some legal jargon and cite one of the IRS publications in order to get it approved. So what this says is that even though the taxpayer is filing this election after the deadline of March 15th, they acted as if they were an S Corp. And so we're asking if you can grant them relief and still approve the S Corp. So with that being said, you can actually still make an S Corp election for 2023. So even though you're making it now in January or February of 2024, it will backdate your business to January 1st, 2023. Now, with that being said, we do want to file the tax return on time. So if you plan on making a late election for 2023, we would actually want to file your tax return by March the 15th, and we would submit the late election with the tax return. You can still, file an extension. You can still file an extension if you were doing a late S Corp election for 2023, but it's just cleaner if, you wanted to do an election for a previous year and you file by the March the 15th deadline. Also, just a rule of thumb, if the business qualifies to have tax savings as an S Corp and you meet the requirements and you have not filed the previous year return, you can go back 3 years. So essentially, you can also do 2021 and 2022 tax year as an S Corp if you hadn't already filed for those years. Now, the savings does have to be worth it, because if you have not filed, you would get hit with the late filing penalty for filing the business return late. So that probably would only make sense if the business was already a partnership and you were going to be getting hit with those penalties anyway, because you hadn't filed the partnership return for 2021. So just to recap, if you want to make the election for 2024 for this tax year, you have until March the 15th to have the paperwork sent in to the IRS. And if you want to make the election for a previous year, we need to make it as soon as possible, as we will need to file the actual tax return by March the 15th.
Okay, thank you. I hear you well. I've been filing my taxes with you guys now for, I think, for the past 5 years or so. But I hear Ebere was saying that something is for members, like they have meetings for members. I don't know if I'm a member or I'm not a member, and how does somebody become a member? Because I've been filing there for the past 5 years, but I don't know my status.
Okay, so I'll have Irvin send you the information. This is for the clients in the Wealth Building Program. So we have two kinds of clients. We have clients that are in the Wealth Building Program, so they pay a fee and it covers all our services for the year. And then you have those who just pay us for a service that they need, whether it's tax prep, entity structuring, or stuff. So if you're not in the Wealth Building Plan, you don't get the business meeting, or if you want to do the business meeting, there's a separate fee for that. But I would ask Irvin to send you out the Wealth Building Plan link and registration form so you can see the information and the fees to join the program.
Okay, thank you.
And welcome back. Are you back already?
Yes, I'm back.
Okay, well, how was the real estate conference? I wanted to go, but I was going to be here. So how was the real estate conference?
It was so nice. The room was full with a lot of knowledge. We came back full and ready to execute.
Awesome, awesome. So for those of you that don't know, we have Charles Blair, who organized a cruise for real estate investors for about 1 week. And so they've been oppressing us and sending all these pictures on Facebook. So that's why I was asking her.
It was
Okay,
so nice.
everybody, thank you guys and have a great rest of the day. We will keep the line open for those that have questions. And then I'm just going to wait until Irvin has copied out everything from the chat before we close down. All right, Irvin, you can stop the recording now. Have a great 2024, everybody, and look forward to working with you guys soon.
Thanks so much, Ebere.
Thank you. Thank you so much.
So I see we have one question in the chat. It says, how long do you have to make the S Corp election for a new